No major news today, so let's get straight into the data. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. Moving over to fear and greed, we got a 45 here today, 45 yesterday, so basically flat. You can see it here. Momentum still in greed, still fear on strength and breadth. Breadth actually continuing to trend lower here today. Put call ratio stepped into greed, so we're still looking a little bit better than we were yesterday. Volatility flat here today. And then on bonds, we have fear on both categories, so that's interesting. That's worse than yesterday. Makes sense. We're still kind of in that neutral category for fear and greed. Moving over to seasonality, you can see June seasonality. Peak of markets for this month was supposed to be the 10th. I think we might have already gotten there. We had a huge gain 2 days ago, and that really encapsulated all of this move realistically. The NASDAQ was supposed to be around a 1.5 to 1 3/4 move this month. We're basically already there. So we'll see if we get that dip into the mid-month like it shows on this chart. Looking at the calendar, we have all that unemployment data tomorrow. We'll see how that plays out. And it's expected to be a bearish day seasonally. And then it transitions into a bullish day on the Monday, backed by 2 bearish days and the FOMC meeting next week. Moving over to the economic calendar, we did get that rate cut from the ECB. That's pretty interesting. It really didn't move markets very much. I thought that it might be a little bit more impactful. Went from 4.5 down to 4.25. Lending facility 4.75 down to 4.5. So see how that matters over the next coming weeks. And then we got unemployment data here. Initial jobless claims 229, higher than the 220, higher than the previous read at 221, which was actually revised up from 219. So continuing to see that weakening jobs data. And then the Fed balance sheet rolled off about 30 billion, nothing crazy there. And then looking at Friday, of course, we have the participation rate, non-farm payrolls, average hourly earnings month over month, as well as the unemployment rate. I think this is going to go into the 4s tomorrow. I can't imagine we're going to be in line with expectations. All of the other data has been worse, so I do expect this to go into the 4s. We'll see how that plays out for markets. I would guess that we'll see the Russell go down on that data, but I think the SPY and the NASDAQ will probably hang in there pretty flat. Moving over to max pain here, you can see 530 is the support level, 535 is the resistance, and that's where we are right now. Stuck between those two levels. Top of the puts is 535 as well. We talked about how we were already there, didn't really expect an up move today, and sure enough, we didn't get it. We'll see how it plays out tomorrow, but still not really expecting to finish above 535 in tomorrow's session, unless the jobs data comes in crazy and markets really like it. I don't expect that. Total options, only about 450,000. Put call ratio at 1.92, nothing crazy there either. Moving over to the charts, starting off with the S&Ps, you can see markets were completely flat today, 0, 0, 0. Slightly bearish on the candle, but basically completely flat. After hours, it's up a little bit. We'll see how it plays. It's been pretty much in line with the max pain numbers. In terms of those medium-term trends, resistance is around that 540 area. Momentum slightly bullish. See how it plays out. Does look okay going into tomorrow's session. Might just be a pullback in time coming off of that really strong rally on Wednesday. Looking at the Tasty charts, you can see that bearish candle. Momentum continued going to bearish. You can see this momentum has been pretty consistently moving to the bearish side, while markets have hung in there pretty well. That is not typical. Usually when you see this kind of a move, eventually markets move in that direction. You can see it here. We consolidated for a while this bearish momentum was building, and then once we were getting into those last couple days, it accelerated pretty well to the downside. So not super common to see that kind of a move on momentum without getting some price action to follow. And then looking at the 4-hour chart, you can see that pullback in time. Upper ATR band did trend a little bit higher, but it did tighten. That band right now is at 536.32, so that gives you about $2 of upside from here before we hit those resistances. And then ATR stop did move a little bit higher, 529.60. Moving over to the NASDAQ, very similar thesis, sideways choppy action, slightly bearish on the day, momentum slightly positive, almost overbought conditions, almost looks identical to be honest, rallying a little bit after hours. We'll see how it plays out in tomorrow's session, just about 40 cents there, nothing crazy. Upper resistance would be this trend line here at around 470. I don't think we're going to get that far tomorrow. I think we'll get there eventually. This trend is pretty strong still, but I don't think it's going to happen tomorrow. Might see a slight bullish day, but not quite make it there tomorrow. Moving over to the Tasty charts here, you can see rallying very close to that upper ATR band. That's at 467. ATR trailing stop is 444 on the 4-hour chart, which is a pretty decent down move. That's 20 points lower or so, or about a 5% down move. And then similarly here, momentum definitely bearish. It's accelerating to the bearish side while price is going higher, which is definitely concerning. Not a lot of upside potential. And then you can see that upper resistance here. It's even tighter on the Qs. 464 right there, just about 70 cents higher. We're almost there after hours as well. You can see it about 30 cents higher. Momentum is bullish here. No volume on the day makes sense. And of course, it's going to be dependent on what we see out of the unemployment data tomorrow. Moving over to the Russell and the Dow. Russell got sideways choppy action, inside candle. It's rallying a little bit after hours. Down 0.72, but like I said, it's back up to almost 204. Momentum choppy, basically flat. We were slightly positive yesterday, slightly negative today. So honestly, I would expect this to kind of step up at some point, similar to what we saw here. Slightly bearish, back to bullish, slightly bearish again, back to bullish, and then we rolled through. So this does kind of look like it's going to break to the upside in my opinion. And then we got the Dow continuing to roll to bullish. It's not moving very aggressively, which is interesting. 21 EMA sitting there at 392.23. If we can get above that, we're probably headed back towards the 400 area. But I think we might find some resistance in that zone. Moving over to stocks that moved today, we got Uber and LULU. You can see Uber with a big move, almost 5% higher. You can see this was clearly rolling up from a key support at 63.42. I watched Uber in the past, so this was a level that existed, and you can see it was clearly built on this level here from December of 23 and this wick high from 15 December. So retesting that zone, caught a bid. 55 EMA as resistance, also this trend line as resistance. If it gets above that, maybe a push to that 80 area. Uber looks like a pretty good move there. And then LULU, this had earnings and it was decent, better than expectations. And this had a nice little move, held the 8 EMA, rallied into the earnings, gave a lot of it back. It was up about 11% at one point, tested this low back here from April. It's right in this zone, 21 EMA, VWAP. It's down a little bit after hours. This trend is pretty terrible, to be honest. It was up around the 515 area. It's almost been cut in half all the way down to the 300 area, and then it caught a little bit of a bid. Almost tested this same low here from March of 23, round trip that entire move. So it's certainly possible it catches a little bit of a bid. The macro is not super great for LULU. I would definitely pick Uber out of these two. Moving over to Apple and Tesla here, we got Apple down 0.71. Could not get above that 196.79 level. We talked about it testing that yesterday and then it sold off, so that's not super great. Momentum is basically nothing. RSI overbought conditions. Last time we saw a candle like that was back here on 22 May, and the next candle was down 2%. So keep that in mind. Could be another big down move here. Definitely extended. It's been overbought for a while. And then looking at Tesla, caught a bit of a bid, 1.68%. It's back above my 177.70 level. If it can hold that level, we might push to the 188 area. I do like that as a trade. I continue to say this has hung in there quite well with a dip, tried to break down, had earnings, got back into this range. It's been holding for a while. Almost like someone might be accumulating a position. And if this breaks higher, 188, like I said, in play, and then 200 pretty closely behind it. Moving over to Microsoft and NVIDIA, the two most important stocks in the market by far. Microsoft just barely positive, 0.12. Momentum still shows this could go higher. In terms of trend, it is positive. It's a little bit concerning to see it retesting that trend line, potentially a zone of resistance there. And then NVIDIA doing the very same thing, testing a trend line, broke down from that trend line here today. If it gives back too much more here, that's going to be a little bit concerning. Obviously, this is a super powerful stock. Everybody wants to own it. Not saying it's going to break down and enter a bear trend by any means, but a slight pullback is definitely not out of the cards. You can see two bearish days in a row here just a couple of days ago. Found support and then rallied higher. Could see another move like that. Slight pullback, rally higher later. Moving over to Meta and Amazon. Meta threw a big wick higher like we expected it to, but then it gave it all back. So it touched that 500 level, pulled back. Would have been a nice strong day if it held that level. More than 1% higher, but it gave it all back and ended up negative on the day. Not super great, showing that there's some selling pressure in that zone. And then Amazon, what a breakout. So we talked about this zone being super critical, rallied right into it, got above this trend line, held that level, gapped through the 181.41 level, and then it went straight up 2%. This looks super good, probably headed to 188.61. I do like that move. Momentum is bullish here. I'll probably look for a position in here tomorrow if you can get a decent entry. Amazon looking a lot better than it did yesterday. Moving over to staples and discretionaries. Staples hanging in that same area we've been in. Momentum still swinging to bullish. RSI looks pretty good there. You can see breakout above this trend, dipped low, held that level. could rally higher here. And then you got discretionaries. We had a bullish day on Tesla. We had a bullish day on Amazon. Momentum is bullish here. It's right at that critical level. If it can get above that and hold, 180 is the next one. And then if you can hold that, 185 decently in play in my opinion. And see, last time we got through here, held, went straight to that next zone. Similarly here, broke through, right to that next zone. So far, every time we've gotten back to that 180 level, it's broken down, but this looks okay. Hot with a low, higher low, rallying up. If you can get a higher high here, discretionaries might be in a little bit better position tomorrow. I do like that move on Amazon. Moving over to oil and copper, you can see oil caught a little bit of a bounce off that critical level, 73, touched it here on Tuesday, held it here on Wednesday. Dead cat bounce, in my opinion, still very much a downtrend. We'll see if we get a structural change there. Might rally back up to the 200 around 80-ish or so. And then copper, similar move, coming off that 4.54 area. 2 bullish days in a row, momentum starting to swing to bullish. We'll see how that plays. 21 EMA is going to be your resistance there at 478. Moving over to Riot and Marathon here. Riot caught a pretty strong bid. So we talked about this 8.78 area, critical zone there, almost wicked it on the Wednesday, caught a big rejection, and then we got the gap down and continuation higher back into the middle of this range. That looks pretty good. I would expect at least a little bit of continuation off of that. Let's see what it looks like on the hourly here. So it's running into that 200 SMA. That'd be the level I'd look for a breakout. If you can get above 1019, then you could be up to these previous highs around 11, maybe even 1120 in there. That could be interesting on Riot. And then Mara, this was a little bit disappointing. I was kind of hoping for one of those rocket ship moves that you can get on this stock. It was obviously bearish on the day, 1.28% to the downside, 27 cents lower. But it is holding that trend line, which is interesting. So this is not completely out of play. You could get a continuation higher. You can see we did throw a wick up to that 22 area at one point. Let's look at this on the hourly as well. Yep, got up to 22, gave it all back, not super great. Thought we would get a bigger move into that 22, into that 23 area. Didn't quite work out that way. So still hanging in there. It's in a zone of support. If it can start to move higher, that could be a decent setup. Out of these two, they're kind of in a zone of support. Want to see one of them break higher. It's hard to pick between the two right now. Moving over to Breadth, 20 and 50-day Breadth. Really didn't do much of anything. Basically flat on 20-day. 50-day caught a little bit of a bid. It's interesting to see it holding that 9 EMA. So we got above it, holding that as support. That does look a little bit more bullish than it did yesterday based on that. Momentum on both of these swinging to bullish a little bit. RSI there on the 50-day just barely above that SMA, so that's interesting as well. I think you could argue this looks a little bit better than it did yesterday, but not by much. Moving over to the put-call ratio, we don't talk about this one super often, but look at that candle. Absolutely insane. The high of day was 3.12. Massive, massive spike. Makes sense why markets couldn't go any lower here today. Too many puts in the system. I don't think I've ever seen that. Okay, so we've gotten one here. What day was that? March 17th of 2020. I think that was the COVID low, to be honest. So that was like the bottom of markets. And the high of that day was up at 3.149, and then the high of day today, 3.12. So extremely high on the put side. Makes sense. Like I said, markets couldn't go any lower. Too many puts in the system. I think too many people might be thinking this market is going to break down massively, so they're getting into puts too quickly, which typically does not allow markets to break down in any major way. So interesting to see that on the put call ratio. Definitely a historic event if this data is correct. Moving over to 200-day Breadth, I just wanted to highlight the big divergence between those two. Look at that bearish candle. Pretty bearish. Well below the 69 level, headed towards 64. So the other two candles were a little bit bullish on the 20 and the 50-day. 200-day absolutely showing bearishness, probably pushing down to 64.7. So again, that's concerning. RSI definitely bearish. Momentum kind of interesting. It is rolling to bullish, but it's fading on that strength. Like I said, I think this is probably headed down to 64. We could find some support there, but a clear divergence between the short time frames and the longer ones. Moving over to the dollar, nothing crazy here today. Obviously, this is waiting for the unemployment data. Had a slightly lower high, couldn't get to 104.4. This might break down a little bit tomorrow. We'll see how it plays. And then the unemployment data is going to push it pretty majorly in one direction or the other. If the unemployment data is very weak and the jobs market continues to be weak, you would expect the dollar to go lower, at least to 103.6, probably break that level and head lower. If the data is strong, we should see the dollar break higher, which could be bearish for equities. Moving over to yields, it looks like yields are anticipating weak jobs data. Makes sense why they would be headed lower. We have the FOMC next week. They're probably going to talk about the weak jobs data. It's also worth mentioning the inflation data has been a little bit tamer, so probably back on that trajectory for a cut potentially in September. That's when I've been templating it, and I think that's what markets are pricing in here with yields at these levels. Moving over to bonds, very little movement here as everything else. J&K right in the range, TLT still holding that 92.82 level. Again, they're going to be impacted similarly to yields. If the data is weak, bonds are going to go higher. If the data is strong, bonds will probably break down. So we'll see how it plays out. Again, right now the setup is bullish on TLT, which should indicate weaker jobs data, which is what we've seen pretty much all week. Moving over to volatility. Volatility on both of these were down a little bit. Interesting to see that on the MOVE index. This has been basically straight up for a couple of days here. VIX right in the same range, waiting for the data. Momentum bearish. RSI, it's hanging in there. It's right at the SMA. If it was going to bounce, this would be a zone to do it, so watching that. But otherwise, no change really from yesterday. Moving over to my accounts, basically flat in my Roth. This was down $1.50, managed to mitigate almost all of those losses, so that was good. I think I've kind of hammered out this trading a little bit better here in these choppy markets. And then you can see my main account did quite well, $400 on the day. I think this total is actually supposed to be a little bit higher than that. We'll see how it shakes out tomorrow. In terms of positions, no changes on my covered call. Still here at 457 for a long time from now with almost a $10 credit. So we'll see how that plays. That is across the FOMC. That's why there's a huge credit there. So see how it plays out. If markets break down, I can always take these shares off and leave these calls on and collect that money over time. And similarly here, 466 call for $5. Made some money on both of those positions. And the reason I think this account value is off just a little bit, you can see shares should have been negative on the day. $28 there on 200 shares should have been about minus $50 or so. And then I had some puts at 463. Those were almost zero, so I closed the position and then I rolled out to a 462. Made a little bit of money there. 139 on the credit. Wanted to be a little bit further out of the money going into that earnings. Going into the unemployment data, again, slightly bullish on the Qs, slightly bearish on the IWM. Let me know down in the comment section what you think the jobs data will be. Is it going to push markets higher or lower, or be a nothing burger? Definitely let me know down in the comment section. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.